How you doing, Jody?
Hi, Sunny. How are you?
Good, good. How are things going?
Very good, thanks. Um, I'm here today to go through some of the programs that you have offered for potential investors, and I do like what I see as far as some of the opportunities that you have created for people. I work with a lot of investors. I work with a lot of people who own real estate, looking to buy real estate. One of the big things is to be able to come up with a deal that can be negotiated where everybody is getting, what they want from the deal, and you have many programs and opportunities where you can offer people separate programs. For instance, if they have cash, they can put cash down in a deal for you and get a preferred rate of return on that money. You have deals where if people want to buy in but they don't have the cash, you will front that cash for them for a cost. However, they then have the opportunity to make the investment themselves and then get a good return on their money. So I think you have created a good opportunity for many people who want to invest in real estate and may or may not have the cash. As far as, I'm a partner at Wolf & Company, a CPA firm, and I'm a tax partner, so I work in taxes. And one of the things with real estate investments is that there are a lot of tax benefits. First of all, you are able to depreciate the property and write a certain amount of the purchase price off over a number of years and actually take an expense for that. You also are able to expense all of your operating expenses such as real estate taxes, insurance. You also can fully write off any interest. If you are financing the property and paying on a mortgage, that interest can be written off. There are special rules for deducting losses on real estate, and something that I would advise any potential investor to talk to their accountant about. But if you're able to deduct those losses, they obviously can offset other types of income and be beneficial to you. There are rules that allow real estate professionals to be able to deduct these losses in full each year as they're incurred, which is a great tax benefit. On the sales of properties, depending on how you're holding the investment and the intention with regard to holding the investment, you may be able to defer tax on gain on the sale of the properties by doing a deferred like-kind exchange, or otherwise called a Section 1031. Also, depending on how the property is held and the intentions with regard to the property, when you sell it, you may be able to use a lower capital gain rate, which is currently 15%. So there are many tax benefits with regard to owning real estate, rental real estate, in addition to the investment opportunities, especially right now with regard to the current market. This is an opportune time to be able to invest in properties at a decent price and get a good return on it when you sell it. I know, Sonny, I've reviewed your lease agreements, and he has purchased many properties and already has them, many of them up and running with leases already signed, and getting a rental income on these properties in the interim between purchase and sale of the properties. So I do see a good opportunity here.
What do you think about the rent roll? I mean, with some of the numbers that I actually, like the purchase price, the
Right.
acquisition, the rehab costs, and then now looking at the rent roll, what goes through
Well,
your mind as an accountant?
From looking at one one factor that is often looked at when you're looking at real estate is the capitalization rate, or in short, the cap rate. And the cap rate can, you know, when your rents are, in comparison, the cap rate is your rents, your ordinary income, your operating income, which is your rents less your fixed costs over what you've paid for it. That cap rate is at a relatively high rate. You know, I'm not a real estate professional other than, you know, working in real estate as a CPA, but from my knowledge of what I've seen in the market, that, you know, anywhere from 15 to 35%, which is, you know, what you have here, is, you know,
Silly, right? Or
good
no?
rate. It's a good rate.
All right, Jody.
And I mean, you know, as you're selling the properties, the cap rate goes down because the value has gone up. So you've gotten the best on both ends.
It's